Alright guys, so welcome to trading school. It's another Friday again. So today we're going to be looking at the trading participants. Yeah, it's not a common topic in trading, but it's a very crucial topic to understand. Something you have to understand, because really understanding this will help your psychology, to help your risk management, it will help your expectation, it will give you an edge in the business, right? So what do we mean by trading participants? So I've defined it this way for everybody to be able to understand what I'm trying to say. Trading participant is a wide sea of unknown faces, literally making decisions that will affect our trading positions directly or indirectly, right? So these guys are the people that are making transactions. They are buying, they are selling, they are just making decisions basically, and these decisions can affect our positions, because if we are buying and more people are selling, or the volume of sales are higher than the volume of buy, that can take our position in the losing side, right? So these are the concepts that we'll try to uncover today for you guys to get the idea of really what trading is really all about, what we're trying to do as traders. So the first market participants to note are the buyers. The buyers are the guys that come and buy. Simple. They are the people that are buying stuff. Why are they buying? They are buying to either make profits, or they are hedging. If they are a company, maybe trying to use derivatives to hedge their products. That's another concept we might cover for another time, but that's the thing. Yes, in case you don't know that. So some people are buying for speculative purposes, which is basically what we as traders do, while others might be using it for hedging purposes, right? So as traders, we want to understand that buyers push prices up, right? If there are more people buying volume, of course the prices will go up. The price of Apple shares will go up. The price of Bitcoin will go up. It depends on the opposing side, right? Which are what? The sellers. So take for example, like this our guy here is selling maybe orange. I don't know what would I call that. Oranges, bananas. Alright, so take for example, this guy might have his bananas for sale that might originally be priced at, say, $1 per bunch, and we have 2 bunch there. But suddenly, maybe the buyer now has there's not like 10 people wanting to buy that bunch. Everybody wants it. Do you think the price will go up or the price will come down? Of course, the price will go up when the seller is trying to sell. But for the buying guy, okay, for the selling guy now, for example, if the bananas, nobody wants them, the price of those bananas will fall, because right now only one guy is available to buy maybe the 2 bananas. I'm like, he has a bargaining power. He has the bargaining power to do that, right? So sellers also can be profits profit making motives, and they can also be for hedging purposes. So people that sell maybe Bitcoin or stocks, it depends on what they are using to sell it. Most of the time, they use leveraged instruments like stock, options and futures, so that for hedging purposes and also for trading. So the traders are the ones who want profits. The hedgers, they don't really care about profit. They are just hedging maybe a business risk. So the last guy is the guy that has not decided yet on what to buy. He has options, right? But he has not fully made the decision to either buy something or sell something. And there are many of them like that in the market, just as there are many of the buyers and also many of the sellers. But just that the buyers and the sellers, they are already in the market, that their decisions is already reflecting on price. So for you and me as a trader, our concern is not really about this buyer and the seller. Our concern is about this guy. It's about the undecided guy. Because really, that's the guy that is either going to make us a winner or a loser. Why? Because if we get into a sell position, and these undecided guys that are on the sidelines, they have the money and the capacity, the willingness and capacity they have the capacity but they don't have the willingness yet. Then we have the capacity and willingness, then we sold. So we short the market, right? So what can make the price go lower for us to be able to buy it at a much lower price to make profit? If more people join us to do that selling, right, the price will fall. Meaning we have to sell so that we'll be expecting the other people that will join us to also do the same in larger volume that will be able to push price down. I don't know if you guys are getting me. So if you're not getting me, you can ask your questions in the comment section. We'll try to get back to everyone who asks questions. Right? So what I'm trying to say is the fact that traders, really our job is to forecast this undecided guy. Because the buying guy and the selling guy, they are gone. They are what we are seeing right now in price. But for us to make money, our faith depends on the people who are not yet in the market, but they have the money to be there. That's really it, guys. That's really it. So when we say we are forecasting price, we are not necessarily forecasting price. What actually we are doing, we are forecasting behaviors of future market participants. That's basically how we make money trading. We can't predict it, but we can, to some extent, forecast. And there are several tools definitely to do that. So by the way, you can check out our PMI program. We teach you how to basically try to forecast what this undecided guy is, or not necessarily a guy in itself, because usually in reality per se, they are a group of people, group of companies, like they are just faceless people and companies we don't know yet. But they have the capacity, but they don't have the willingness yet to buy or sell. But they can do either. And we want what they are going to do to be in favor of our trades. Right? So that's the idea of trading. We are not concerned too much about the buyers and the sellers. Those guys, they are good because they are the ones that will really set the tone for... they are the ones that will really set the tone for us to get the data to predict what the other guys who are going to come later into the market are going to do. Right? Not necessarily predict. I don't like to use that word predict. For us to forecast, right? I think that would be the best word to use. Right. So, knowing these three guys, we now know that the most important is the undecided guy, the guy who has, basically not made any decision yet, but has an option. He has the money, and he has an option to do that, but he hasn't made any meaningful decision to either buy or sell. So, as many as they can be, we want their actions to be in favor of our transactions. So you as a trader, what you should be thinking is that if I'm buying at price A, use your common sense. In likely future, would somebody buy this from me at a higher price? Especially with the target you are having. Yes or no? That's basic behavioral finance. You don't just think from your standing point. You are thinking from what you think other people are going to do. Really, because that's what moves price. You are not thinking from your own side. You are thinking from, okay, what are the other guys going to do? Because they are the guys that will make you money. Right? You can buy a gold watch today, and you should be happy that, okay, say, oh, maybe I buy the watch, I don't know, like 300,000 naira or whatever. And you're like, okay, maybe in the future, I can sell that for 500,000, right? Right now, it seems likely, okay, maybe that might be possible because usually gold will always, increase based on inflation as its case may be. So the likelihood of the undecided guys, people who are not yet buying gold, may want to buy gold from you at that price in the future, looks probably good, right? So that's the idea. You are thinking like, then what if you buy a car today? Maybe a small average sedan car. Just take a Toyota Corolla or Camry. Maybe you buy that car today. Will you expect to sell that car? Maybe just take for example, you're buying that car for 6 million naira. Will you expect to sell that car for anything above 6 million naira in say 3 years or 4 years time? My bet will be that will be very unlikely, because the guys who are not yet buying cars at that time, most likely, except maybe some crazy inflation went on, would value that car for less. Right? They'll value that car for less. So that's the idea. You are trying to focus how much will people pay for this thing in the future. As for trading, you are trying to do that usually in 5, especially for day traders. You are trying to focus that in the next 5 minutes, some in the next 10 minutes, some in the next 15, 30, 1 hour, 1 day, 3 days, 4 days, 3 weeks, 1 month, 3 months, a year plus. So it just depends on the time frame you're looking at. So our job really is to forecast what this undecided guy is about to do. So how are we going to forecast it? So that's where your analysis comes into play. That's why you have to do what have they been doing before. Maybe that might give you an idea of what they are going to do tomorrow or in the next 5 minutes. So as traders, our job really is to what? Forecast this guy. We are going to focus where is he going to put his money. Where are they? Let me just not use the word he now so that you don't think it's just one guy. We call them the undecided guys. They have the money, but they've not yet decided on what to put it on. So as traders, we want to be very psychological, maybe I should use that word, I don't know. But we want to think in the view, not just from our own points, but from the view of other people. If you were them, will you buy that thing you want to sell to them at that price? Why? And why should they buy it from you at that price? So you will have to think, because they are the people that, going to move the price in your favor. So you want to know the odd. Most likely, that's why I like tools that seems basic and everybody uses, right? It just makes sense for you to use that. When people try to make very complex special stuff, I'm like, man, this is, well, I don't know, but I don't like my trading to be very complex, really. I like to use tools like everybody uses. I use basically the moving average, stochastic, and all this type of stuff. Although my management and every other thing might be very more complex, but in terms of how I really gauge what this guy might do to move my price, I try to keep it as simple as possible, aka my entry point, right? Because entry, a lot of people think it's really all about trading is really all about the entry. No. Predicting this guy is one part. Meaning, okay, I'm not saying predicting, I don't want to use that word again. Forecasting this guy is one thing. If you will not be able to forecast him every time, right? So that's something you have to put in mind, because if you can do that, man, I'll find that very bizarre, because that will mean you are like some psychic that literally can know what everybody is about to do right now in the market. Man, that would be weird. That would be really weird. If you can do that, just hit me up. I would like to get that type of ability to just predict what the undecided guys are going to do maybe in the next 1 minute. I just, before they do it, I just do mine, and I'm in. So when in the stock market, if you have to know that, that's what you call insider trading, because you've gotten some form of heads up, right? So one way we need to learn about is the idea of following the crowd, right? So this is a chart. The idea of following the crowd. So we want to know, in the general term, where has everybody been moving on to? Because people like to follow each other. It's just life. If you are in a question and answer group, usually you want to see the first person to ask question. Then when somebody asks this question, another person asks question, suddenly everybody feels comfortable and everybody wants to just talk, just be free. And before you know it, the flow goes on. It's just like a trend. People start asking. But usually the first guy to move. What? So our job now is to just determine the general trend. So this is a AUD USD pair. So we can do that by using at least a simple trend line. So obviously this has been going up for a while, right? This has been going up for a while, and it's really in a very key level right now. That's why I just love this chart right now. So in this area, what have you noticed? When price gets here, it goes up, right? But how are we sure that this time is different? It will still this time is also like this and like this too, to still continue going up. I don't know yet, right? So there are some activity we might want to look at to see that maybe people are starting to come back again to the trend, right? And there are other ways you can use your own brain. If you are the one now, generally everybody really saying this right now, okay, if I buy at here, will people buy with me to move the price? Because if we buy here right now, we need people to continue buying so that this price will go up. Or else if they continue selling like the way they sold here and they are selling here, this trend line will just break, and before we know it, we're down on this pair, Euro USD. So the likelihood of people doing what you expect is really what understanding trading participants is all about. Because you don't want to see from your point of view, you want to see from the point of view of the other guys in the market, right? You want to see from their own lens. Because right now, what I'm seeing now is aggressive selling. This is aggressive. These two candles, they are aggressive. It shows a lot of people are dumping the AUD for the dollar, right? And it's kind of expected, because if you look, we've been in this trend since last year, around March. Since March, the coronavirus, the pandemic crash, as I used to like to call it, the COVID crash. So we've been in it since, like, I don't know, March. This trend, the downtrend ended March 19 or so. So that's about 246 trading days, right? Or 245, whatever. So we've almost a year, right? We've been on this. So by next month now, we'll complete 1 year on this trend. And that's why this trends usually don't last this long. So to some people, even though this is an uptrend, they might be saying, okay, maybe this is overbought, right? So then we might want to see, okay, let's check our stochastic. Not just stochastic, I mean any oscillator we probably are using. We might want to look at I like the stochastic a lot anyway, so you probably know by now. Maybe, okay, let me just say the RSI. That's pretty much very popular, right? So okay, so right now what the RSI is doing, we're saying that it's coming from an overbought situation. And notice, we got higher highs here, and we're getting a divergence. So you seeing this has already given you an edge. It has given you a bias that, okay, maybe I should not buy here. Because anything make this what's it called now? This trend line to be broken. If this trend line gets broken, man, I'm pretty sure most people will be very bearish on this pair right now. Right? That will change the bias, definitely change the bias of the pair. Because you are not the only person seeing this right now. Everybody in the world has access to this. And they know that, okay, maybe the trend is weakening and it deserves a correction. Why not? Over here, it sure does deserve a good correction. Right? And imagine us adding, say, the 200-day moving average. So you can see that price has, really gone a bit far from the 200-day moving average. I like my 200-day moving average to be green. I don't know why. I just like green. Yeah. So this alone can give you a bias. I'm saying, okay, maybe now you want to be a bit careful, right? You want to be a bit careful. So if at all you want to buy, you probably want to wait a bit for some strength to start coming to show that people are starting to change their mind towards this pair. But right now, everything look bearish. And you don't want to be you want to follow where you think people are going to go, not where you think price is going to go. They are different. You want to follow where you think people are going to go, not where you think price is going to go. Because if you have gold and nobody wants gold, well, you eat it. Because tomorrow, then maybe somebody just woke up one day and said, oh man, I just found blah 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 tons of gold free of charge. Gold is everywhere right now. It becomes useless. So you want a situation whereby you are trying to get where those undecided guys, because the people that we are seeing their activity right now, they are the buyers and sellers. Buyers and sellers, they are the ones that already push price to this level. Maybe the undecided people who are not joining, some of them might join to push the price down more. So we want a place where we can finally say, okay, maybe we can predict what these guys may do. Just like here, right? It was quite easy to do here. Maybe we saw the touch of the trend line a bit, and we saw like the engulfing, that's in itself could be like a signal in itself, but it's not something I would trade. I don't know in itself just like that, but for reference sake, right? So having this is a good idea. It's a good idea. Understanding that you are not the one moving price. You need other people to move price before you can make money. Even if you have the power to move price, you can't necessarily move price for you to make money by yourself. Just like the guys who trade very, very large fund, of course their money can move price, but usually they don't like doing that, because if you can move price, if you buy, you have to be buying higher than what the market will give. So if somebody that has a lot of AUD USD contract now wants to sell it, he won't just go down and sell it more, because it will crash this price against its own self. So what we should really understand is, will other people join us? Right? Will other people join us selling? When other people are going to join us, or will other people join us? You just want to get what the other participants will do. That's aka the undecided guys who has the money, who have money, but they are not willing yet to either buy or sell. And you want to say, okay, with these guys coming at this price to, if maybe I want to sell here, with these guys coming at this price to follow me to drag the price down, what are the odds of that? Then you bet based on that odd. Right? That's what I do. And I think that's the best way to approach this. Because you are not the one moving price. And like I said, even if you have the power of moving price, you don't want to do that, because you will do that against your own self. Big banks, most of the traders, they don't go into a position sometimes on full scale. What they do, how am I going to put it now? They share the contract into several positions. So they get into the market, especially in areas where there's high liquidity. Because if they get on areas where there's very low liquidity, they are going to just shift price against themselves. So others are part of stuff traders need to start to put into perspective. So by the way, I wrote an article on this. So, but I'm going to link this article on the going to link this article on the, by the way, this is Swably's blog. You can go and get a lot of material. I write a lot of blogs here. So this is the post I originally made. So I wanted to explain it on a video. That's why I said this trading school is going to be all about it. And I hope you get a lot of value from this. So yeah, this is the article. You can, after this video, you can go back to the article and just read. I'm going to link the article on this video, so you can read what you are saying. Just read about them. I was more, in terms of explanation and all that. But at least this video I gave some in terms of charts analysis and seeing what other people also are saying and making decisions based on that. That's really it. Because you don't want to do what people will not do in the future. In terms of, you want to be smart, right? You want to be smart. You want to do it before people do it, start doing it. Because everybody, just like, price has gone so high, everybody who wants to buy again, who will buy from you, or who will sell to you, that type of thing. All right, guys. So we've reached our time limits, because I want these sessions to be just maximum maybe 30 minutes, 32 minutes, thereabouts, right? So like I said, we spoke about the buyers, the sellers, and the undecided, and we made sure to understand that the buyers and the seller, they are the ones reflecting on price right now. They are gone. For us to make money, we have to forecast the undecided guy. So if you have questions, please drop it on the comment sections. We are going to go through them and answer as much as we can. Hopefully we'll answer everybody anyway, so why not? Especially if you have good questions, right? So make your questions very, very good. And if you have also a topic you want us to cover in the future in this trading school with Joshua E. Ofomaja, please drop it also in the comment section. So alright, guys, thank you very much, and I'm grateful for the time. Hope you got value from this, and if you got value, please just put the fire emoji on the comment section, and also just say thank you. And if you got value, just let us know if you got value and what you think we can also improve in trading school. Whatever you feel we can improve, we also want those feedback, not always the good things. We want the constructive criticism and all that, right? Thank you very much.